Ooh, what's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. In today's video, we're going to be talking about a stock that's about to go public that I am in absolute love with. I think the potential for this stock to become a huge multi-billion-dollar company, like 10, 20, 30, even $50 billion company, is massive. The sector that this stock is in is genomics. We've all seen how popular genomics has become over the last several months, brought into the spotlight by Cathie and ARK Invest, who have an ETF dedicated solely to just that, genomics. Being able to test somebody and seeing what diseases they're at risk for has massive opportunity, not only to save lives, but massive revenue producing opportunity as well. The potential is literally limitless. You find out what somebody's at risk for, you can then recommend them to a doctor who can then recommend them certain medications. Think about all the kickbacks and the revenue streams that this can provide. And the stock we're going to be breaking down today is probably the most popular genomics company in the world today. You really don't think of this company as a genomics company, but it is. The stock we're going to be breaking down is 23andMe going public via Richard Branson SPAC. Now, 23andMe is popular from their commercials. They can test you, show where you're from, what your ancestry is. But I think this is just the beginning. This is just the foundation for 23andMe, and I see this company as a massive growth opportunity, a huge growth stock that is going to be wrecking ball to come into the stock market and just be a game changer. So let's break down this huge growth stock. I'll offer my opinion on where I would like to buy, if I would like to buy, price targets, price predictions, all that type of thing. Let's get it. If you guys would like to come trade with me, get my buy and sell orders in real time, there's a link in the description to a free trial, so go down there and check that out. Also, if you'd like to get a couple of free stocks from Webull, there's a link down there for that as well. The stock that 23andMe is going to be merging with is ticker symbol VGAC, Virgin Acquisition. This is Richard Branson SPAC, and we can see today that after the news was announced, it gapped up pretty nice, and then all day long we just had a steady chop and then a nice move higher. But I still think after this move today that this company, this SPAC, is still undervalued, because I think the potential for this 23andMe to expand and build revenue streams off of is limitless. Let's talk about why. First, let's break down the merger, what the details of the merger are going to be. So 23andMe is a leading consumer genetics and research company that offers a personalized health and wellness experience. Everybody thinks of 23andMe as just the ancestry website, but I'm going to explain in a little bit why it's much more than that. The transaction will provide the capital to fund additional investment in key growth initiatives across 23andMe's consumer health and therapeutics business. The transaction will value the 23andMe at an aggregate enterprise value of $3.5 billion. So it's going to be going to market with a market cap of expected to be around $3.5 billion. And that seems like a hefty price tag, but I still think it's undervalued. So this is the 23andMe website. I'm sure you guys are familiar with it. I'm sure you've seen the commercials, and I'm sure you know somebody who's ordered one of these kits. So basically, you order a kit in the mail, you get tested, it tells you where your ancestors are from and even what genetic diseases you may be susceptible to. This is where the huge revenue streams potential, keyword potential. This is just my opinion on where I think 23andMe can go to generate huge streams of revenue. So you have the test kit, it goes in the mail to the customer who buys it. I even recommend in the future giving these things away for free. We'll talk about why in a second. So customer gets it, they get tested, and let's say the test says that they're going to be susceptible to diabetes, high blood pressure, and then 23andMe comes back with the test results, tells the customer, refers them to a doctor in that customer's area, okay? So then that doctor needs to kick back some money to 23andMe for getting the referral. Then that doctor writes a prescription for high blood pressure, for diabetes, and then those pharmaceutical companies kick back even more to 23andMe. That's the potential revenue streams that I'm seeing. I'm not sure that's where they're going to navigate to, but I see this as huge business. I think it's so much more than just ancestry. Sure, the ancestry stuff is great, and the genetics, the genomics, whatever you want to call it, and telling people what diseases they may be at risk to have based on genetics is also great. And I think that's where the real money is going to come from. Referrals to the doctors, referrals to pharmaceutical products is going to be big business. 23andMe, we're all about real science, real data, and genetic insights that can help make it easier for you to take action on your health. 76% of 23andMe customers reported making healthier choices post-test kit. 55% reported eating a healthier diet, while 51% reported setting healthy goals, and 45% reported an increase in exercise. Here's another possible revenue stream that I potentially see happening. How about insurance companies? They often offer their customers incentives to live a more healthier lifestyle. So the insurance company could say, we'll give you this 23andMe kit. You take the test. It tells you what risk you have. You take proactive measures to prevent these risks from happening. We'll give you a discounted insurance policy. These revenue streams are endless. So here's an example right here. You take the 23andMe genomics test, and it tells you from a genetic standpoint what percentage you have of getting type 2 diabetes. Let's say it's high. Let's say it's 90%, right? You have high percentage standpoint of getting diabetes. You're then referred to a diabetes disease expert. That disease expert then sends you back the referral fee. Ka-ching, ka-ching. We're here on the 23andMe investor presentation. Let's take a quick look at it. Bullet point number 1 just defines why I love this company so much. Disrupting the healthcare experience. We love investing in disruptive, innovative tech and companies that solve a problem. 23andMe is a pioneer in the healthcare space, sending out these genomic test kits to people, to their customers, and the revenue streams. I keep saying this, but it's a huge point. The revenue streams are going to be there. 23andMe is building a personalized health and wellness experience that caters uniquely to the individual by harnessing the power of their DNA. Number 3 is also a huge bullet point. This brand is already out there. It's already a trusted brand. People are going to be willing to go with this company over other companies because it's already well recognized in the space. Right here, the healthcare system is dysfunctional. You go to one place, they tell you one thing. You go to another place, they tell you a different thing. That all comes to an end with 23andMe and genomic testing. You get the test kit, and data doesn't lie. Numbers don't lie. Doctors can be wrong. Data sets and numbers are typically right. So you get the test. It says you're likely to have a high risk to have diabetes or another disease. Then you can live your life and be proactive to prevent that from affecting your life. 25% of U.S. healthcare spending is waste. 75% of consumers wish their healthcare experience was more personalized. So they're comparing themselves to some big stocks out there, some big companies out there right now. Media, they're comparing themselves to YouTube, travel to Virgin, e-commerce to Amazon, hospitality to Airbnb. Healthcare, they say they're in that ballpark, and I absolutely agree with that. I think this is a game changer. I really think this is a game-changing company because there's nothing else out there like it. We haven't seen anything like this. This is about as disruptive as it gets. You guys know how much I love software as a service, that recurring revenue, subscription products. Well, 23andMe also offers a subscription product. They already have 75,000 enrollees. They're getting that recurring revenue. It provides that foundation to grow off of, and then you get blast off, headed to the moon. Medicine today, you got to go to the doctor first. You got to get sick first, then go to the doctor, and then you get prescribed a medication or a treatment. With 23andMe, it's proactive, meaning you don't have to be sick yet in order to get treatment. That proactive also equals dollar signs, right? Because you're not paying for healthcare until you get sick right now. But with 23andMe, you're going to start probably paying for some type of healthcare early to prevent what you're at risk for. All right, let's take a look at the numbers, the financials real quick. Now, in my opinion, for me, this has to be a long-term investment. They're not going to be able to capitalize on a lot of those revenue streams that I've talked about for many, many years because they're just not there yet. They don't have it set yet. But once they do have those revenue streams in place, it's game over. But we can look at the revenue, and it is not where it needs to be in order to be priced where it is today. We're going to be going to market with a valuation of $3 billion. We have revenue of only $400 million this year. That's going to decrease, and we have 2024, we have the same revenue as we have in fiscal year 19. So the growth is going to be slow, but once they get those revenue streams, I expect that growth to blast off. So in my opinion, this for me has to be a long-term investment. You have to go in this knowing that you're going to have to be waiting for a while to get those revenue streams in place. But once they come, it's going to be a monster to be reckoned with. Now, I say that the revenue isn't really there yet, and the valuation of $3 billion may be a little bit high, even though I'm in love with this company. But I say that, and we look at PACB, another genomics company. They have a market cap of almost $7 billion on sales of only $79 million. So 23andMe is well ahead of PACB in the terms of revenue compared to their market cap. So we'll see. Maybe I'm wrong. Maybe that revenue comes earlier than expected if they can get some of those revenue streams that we were talking about in place. And maybe the expected revenue growth past 2024 makes up for the fact that the revenue right now isn't really there yet. I'm going to be looking to buy this thing. I'm going to be looking to invest in this for a super long-term hold. I think this is one of those stocks that I want to have in my portfolio forever and pass it on to my kids. I think it's going to be a game changer in the healthcare industry. I honestly believe that. But I don't think we can go into this expecting immediate payoff. This has to be one of those things you put the blinders on. If it drops, you cost average down, and that's what I'm going to be doing. All right, guys, that's going to wrap up this video. I hope you got something from it. If you did, hit that like button for me. It tells YouTube that these videos do provide value, and I really appreciate it. I love all of y'all, and I'll catch you in the next one. Until next time, peace.